Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum.
Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. Let's get across what we've seen overnight. Volatile session on global markets, with European stocks mostly lower. The US dollar fell along with Treasury yields on concern that President Trump was seeking the immediate removal of Federal Reserve Chair Jerome Powell. That saw the S&P 500 and Nasdaq fall more than 1%, but then recover, with the Nasdaq closing at another record high after the president later said he was highly unlikely to fire him. Well, this distracted from US earnings results. Goldman Sachs climbing after notching a 22% earnings surge, while Bank of America and Morgan Stanley fell despite posting higher profits. Johnson & Johnson shares soared after halving expectations for costs this year related to new tariffs and raising its full-year sales and profit forecast. United Airlines forecast lower than expected profit in the quarter through to September as concerns about rising living costs and uncertain economic outlook have led to a pullback in discretionary travel spending. Semiconductor stocks were sluggish after news that Nvidia would be allowed to sell its H20 chips in China had fueled gains in the previous session. Elsewhere among the Mag 7, Meta and Amazon finished in the red. And President Trump has said he's not planning to fire Fed Chair Jerome Powell, despite launching a fresh round of criticism against him for not lowering interest rates. Later in the day, Donald Trump confirmed that he'd spoken to lawmakers about firing Powell, saying, "I talked to them about the concept of firing him. I said, 'What do you think?' Almost all of them said I should, but I'm more conservative than they are." Well, in data, US producer prices were slightly softer than expected in June, coming in flat on the previous month for an annual print of 2.3%. The core rate fell to 2.6% year on year, the lowest since April last year. Gains in goods prices were offset by declines in services, and industrial production in June rose 0.3%, which was more than forecast. And the Federal Reserve's Beige Book of Regional Economic Conditions indicated a slight improvement in sentiment, noting that economic activity had increased slightly. Well, the US two-year yield fell to 3.88%. The 10-year was down to 4.49%. And the US dollar fell but then rose off its lows after President Trump denied he is planning to fire the Fed chair, the Aussie trading at 65.3 US cents. And Bitcoin, it's bounced back somewhat over the past session to be trading close to 119,000 US dollars. Oil prices have eased as US fuel inventory builds and concerns about wider economic impact from US tariffs outweigh signs of increasing demand. Brent crude futures around a third of a percent lower at $68 a barrel. Copper fell 1%, iron ore rose 1% to $99 a tonne. And gold initially jumping on reports that Jerome Powell would be dismissed, but trimmed gains after the president's denials. Spot gold trading around $3,350 an ounce. All right, let's get to those moves, particularly on Wall Street. Ira Epstein joining us again from Linn Associates. Ira, welcome back. Good to see you. Goodness, what to make then of those reports that Jerome Powell was about to dismiss, Donald Trump was about to dismiss Jerome Powell. He's denied it. He said lawmakers want him to do it. What did you make of that market response?
You see my eyes rolling? That the lawmakers that he's more conservative than the lawmakers. I mean, if you believe what he says, shame on you. What this president does is he uses the media. He floats balloons. It's tiring. There's no question about it. In America, I can tell you, people want him to stop this already. It's not as though they're behind him with the Fed chair. They're actually against him, and it's working against them. That I can tell you on the different newscasts and so on. Because we want an independent Fed. We really don't need a yes man to be there. We realize that Fed leaders are often behind the curve. They rarely get ahead of it. And it's just the way that it goes. It's like having an oil tanker come at you and you're going to put it into a port. You realize the skill you have to have in order to do that. They get it right just about all the time. But how far ahead are they stopping that ship to let it glide to a safe area? Well, the economy's not quite that way. There's too many different variables that go with it. So we'll see. But when he did that, you saw the immediate reaction. The dollar took off, stock market fell. He backed off on that as fast as he could. And we all had the great laugh when he talks about how conservative he is. So if you want to be into that, fine. Yeah. The stock market's looking for a reason to pull back a little bit. Gold is looking for a base right here. The inflation tariffs this week, Andrew, we will probably have a pretty good idea where everybody's at. They have not delivered the way that they said. Let's understand that Bessent and the president give you dates that make no sense because they don't keep them. Bessent, unfortunately, is at the president's call, and the president runs everything. I think he shoots from the hip and sees what sticks.
Just to be clear, so you think this was a deliberate ploy by Donald Trump to float the idea of dismissing Jerome Powell to gauge what the market response would be?
Absolutely. The press here thinks that Kevin Hassett is the shoe-in. Waller's behind him, one of the Fed governors. I don't know. I don't think there's anything wrong with either, but I happen to believe that Chair Powell is going to sit out his term. I think it's the right thing to do. I don't think that there's a reason to have a yes man in there. And we haven't seen any reason for the Fed to move. You realize the president is calling for a 3 basis point cut, a 3 full points. He wants markets down because Europe has had 10 rate cuts. Europe's economy and the U.S. are not in the same world. Completely different as to the cycles as to where they're at this point. You don't do that. You look at inflation and you look at labor. Those are the 2 mandates of the Federal Reserve, not a mandate to listen to the president.
Well, speaking of inflation, of course, Ira, we've had a read this week on both the consumer and producer prices. What did you make of that? Certainly, as far as consumer prices, we are starting to see the impact of those tariffs.
We're seeing the beginning. And let me make this very clear. You can't argue that these numbers are collapsing numbers. They're the opposite. While we went flat in the PPI, if you took a look at the revision from the month before, I think it was April, you were up 0.2. So when you balance it out, a very small increase in the PPI, and you're gradually increasing in the CPI. Now, most of the studies I read say it's just a question of when we see a little bit more of that. And the question has always been from the buyer to the seller, and I'm talking the seller, the exporter to the U.S. who's buying it, and the middleman all involved, who's eating some of this all the way through. And if they're doing that, then they're doing a great job of keeping this all subdued. And I think the economy can live well with that. Do I expect that we're going to get runaway inflation via the tariffs? No. But when I hear people say the tariffs, oh, it's a one-off and that's going to be it, it might be a one-off for a year, but it's going to be an impact. And the question is, where is it? The market keeps looking for it, and it's like a non-event so far. It's coming, but gradually.
Well, what is the talk there among Americans, Ira, about the impact of tariffs on the local economy and how that's likely to affect the prices they pay?
Businesses can't make decisions. That's what you're hearing. They don't know where they should go with all this. Do they look at it and say, if this is it, I can do this and I can hire more people? Or are they scared that the consumer will back off if something bad does happen and the tariff all of a sudden jumps? I can tell you that almost to an analyst I read, there is confusion as to why these prices haven't gone up a bit more. But let's understand, the government is collecting $100 billion so far. They're online to pick up $300 billion. That money that they're getting in some manner is coming out of the economy. In other words, somebody's paying that. And if they want to eat it, that's fine. They won't that long. That's just how business operates.
Meanwhile, Ira, of course, earnings season has begun. Perhaps we've been distracted by other events. Nonetheless, what have you made of what you've heard from the banks?
Unreal. Did you see those numbers from JP Morgan? I mean, what they do, their size, it's the equivalent of our three top banks. I mean, they fire on all cylinders. I even saw BlackRock, a big client, did not take all their money, but in one day they took out $52 billion on them. I think it was today or yesterday. And the company's still doing just fine. So what's happening is you're entering in America the merger, the acquisition phase. Trading is up. It's summer. It should have been quieter than this, and it isn't. It feels like the fall. The trading is volatile. There's plenty of it. The meme stocks are starting to take off a little bit. We talked about that last week where I told you traders are starting to look at the Russell. Anything that hasn't moved, they get on the social media. We have something called stock twits and other companies, and they get these things going. And all of a sudden, you take these dollar stocks, they go up 50%. It's like the old pink sheets, as we used to call them in the States. It's crazy, but that's what's going on. So there's still fraud, and people aren't scared of this market.
Meanwhile, just wanted to get your view on Nvidia too. Looks as though that meeting that Chief Executive Jensen Huang had with the president certainly paid off in that they're now likely to sell back into China.
Well, he's basically an ambassador for the U.S. in terms of tech. Now, you don't want to get too close because you then end up inevitably with this president like an Elon Musk. You're good until you're bad. But he's doing the right thing, and he convinced the president properly that, Mr. President, they're going to use Huawei and others, and they will get something. Why don't we keep part of that business? And the president was smart. He said, go for it, because these chips are online with what they have with Huawei, and he let it happen. In addition, it gets us more raw materials. And there's big fear about raw materials, the rare earths, if you will. And we saw that the Pentagon bought $500 million worth of stock in MP. And now we saw that contract from Apple for $400 million of magnets. This tells you that there's concern. They want to keep China happy. They want to keep what flow they can from the rare earths because we can't replace them soon enough. That's a problem.
Ira, thanks for joining us from Linn Associates.
Thanks for having me.
Let's turn our attention to what we're likely to see locally. And given we had those sharp falls yesterday, we're looking to recapture some of that lost form there. SPI futures currently up around 0.6%. Stay with us. We'll get right across the open in a couple of minutes.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.